Welcome back to 401k DC Hub, your source for breaking down the complexities of retirement plans, especially for BPO professionals, 401k support associates, and compliance admins getting started. In today's episode, we're continuing Ava's journey, now navigating the intricate world of 401k testing. Let's explore why these tests matter, what they measure, and how they impact both employers and employees. Why does testing exist? Ava learned early that 401k plans receive tax advantages only if they don't unfairly favor highly compensated employees, HCEs. To make sure the benefits are fairly distributed, the IRS mandates a series of annual non-discrimination tests. These tests serve one goal: ensure every eligible employee, not just top earners, has a fair shot at retirement savings. Core compliance tests for 401k plans. Let's break down the 5 major types of tests Ava now tracks. ADP test, actual deferral percentage. Purpose, compares how much HCEs and NHCs, non-highly compensated employees, defer from their salaries. Formula, average deferral percent of HCEs versus average deferral percent of NHCs. Limit, if NHCs defer 6%, HCEs can defer up to 2% more, 8%, if using 1.25x rule, or up to double, capped at 2x if using alternative limit. Example, if NHCEs average 4%, HCEs can't exceed 4% times 1.25 equals 5%, standard rule, or 4% times 2 equals 8%, but only if NHCE average is above 6%. ACP test, actual contribution percentage. Purpose, similar to ADP but evaluates matching contributions and after-tax contributions instead of salary deferrals. Who it impacts: plans with discretionary matches or voluntary after-tax contributions. Limits, same logic as ADP but applied to match percent. Failing this test? Ava learned it can trigger refunds of matching funds from HCEs or require extra QNEC/QMAC contributions to NHCEs. Top-heavy test. Purpose, determines if the plan disproportionately benefits key employees. Key employees. Defined, officers earning over $220,000, 2024 limit, 5% or more owners, 1% or more owners earning over $150,000. Threshold, a plan is top-heavy if over 60% of the plan's assets belong to key employees. Failing this test? The plan must make a minimum contribution, usually 3%, to all non-key employees even if they don't defer. Ava schedules this test right after year-end to determine if top-heavy contributions are needed. Coverage test, 410B. Purpose, ensures the plan doesn't disproportionately cover HCEs compared to NHCEs. 2 methods, ratio percentage test, average benefit test. Why it matters: even if the plan passes ADP and ACP, it could still fail to meet coverage standards, requiring plan redesign or correction. Annual additions test, 415 limit. Purpose, ensures no participant receives more than the total contribution limit. 2025 limit, $69,000 or $76,500 with catch-up. Includes employee contributions, employer match, profit sharing, forfeiture reallocations. Exceeding this, Ava must remove or reclassify excess amounts, possibly return them to the employee or reduce employer contributions. Correcting testing failures. If a plan fails ADP, ACP, or other tests, Ava has several tools. QNS qualified non-elective contribution. A fixed percent, often 3%, contributed to NHCEs to boost their average. QMAC qualified matching contribution. Extra employer match directed only to NHCs. These are fully vested when made and count toward fixing failed tests. Refund method. Ava may need to return excess contributions to HCEs by March 15th of the following year to avoid penalties. Reporting testing results. After testing, Ava prepares internal summary reports, testing certifications from TPAs, support documents for auditors, updates to Form 5500 schedules, especially for plans with more than 100 participants. She keeps a clean testing audit trail, including employee classification, HCE, NHCE designation, contribution breakdowns by source, proof of correction, if any. Operational best practices. To prevent testing failures, Ava implements automatic enrollment, boosts NHCE participation, improves ADP, ACP results. Safe harbor plan design, automatically satisfies ADP, ACP testing in exchange for mandatory employer contributions. Early year projections, mock ADP, ACP testing mid-year gives her time to adjust HCE deferrals or make QNEC plans. HCE tracking in payroll systems avoids year-end surprises, especially in large plans. Conclusion: testing is precision work. Plan testing isn't just a compliance requirement, it's a strategic tool. Ava now sees how each test protects fairness, improves plan health, and reduces audit risks. If you're a 401k back-office team member, learning how to support testing, understand thresholds, and assist with corrections makes you an invaluable part of the compliance chain. And once again, this is educational only. Always consult the IRS, Department of Labor, and your plan's TPA or legal counsel for the latest testing rules and corrections.